when it comes to building wealth and earning an income, or rather, earning an income is only but part of the equation. The bigger question is what we do with the money we earn and whether we are making a deliberate decisions to grow it over time. Now, for many, this might be a daunting task given the pitfalls that I referred to a little while ago. To answer these questions and, of course, give us some insights on what investment opportunities exist out there. Let me welcome on the line my guest, Kathleen Mureithi, founder and convener of the Wealth Circle. Kathleen, a very good morning to you. Thank you for your time. Welcome to Channel Africa.
Thank you. Thank you for having me. Thank you so much.
Yes, indeed. Now, you obviously from a Wealth Circle, where you primarily look at wealth and, of course, educational programs when it comes to e-commerce and scaling one's knowledge, as it were, into this investment space. But I guess a good place to start from is when we talk about growing and multiplying one's money through investing. What does it actually mean in practical terms?
Well, investing is more or less putting your money into assets that have the potential to generate returns. So whether this is through interests, dividends, rental income, or basically an increase in value. So for example, if you have $1,000 and it earns interest every month or per year, then what you're doing is investing. And I want to say investing is very different from saving because people get to confuse that a lot. So investing is for accessibility and security. Investing more or less protects your money, while investing puts your money to work. So when you save, you're more or less setting money aside for your short-term goals or for emergencies. It's safe and it's accessible, but over time, with monetary factors like inflation, your purchasing power of that money it's in a saving account or a place where it's not really earning interest, so you're just setting aside money for that. You're not really investing. So there are two different things, and we usually advocate for people to do those things concurrently. So don't put all your money in a savings account and then call yourself an investor. What you're doing is just playing it safe, and that's not how to go about, especially in these economic times.
And that brings me to my next question. I mean, we often hear about the importance of diversification to diversify your portfolios when it comes to investment. But it can be difficult to know a well-diversified investment portfolio, what that actually looks like. Can you share some light there, what that means?
Diversification is one of the most important principles of investing because what it does, it helps you to manage risk. It doesn't necessarily guarantee profits or eliminate losses, but it reduces the impact if one investment performs poorly. So for an example, you could put money in a unit trust. This is a pooled investment asset class. Someone else could do it and put money in a rental space. Another person could probably play it safe and maybe put money in bonds and bills. So if you're able to spread your risks that way, if one asset class fails or if there's something that happens in the economy due to some of external factors like political instability, some things that just happen that are out of control, then you're able to shield yourselves from putting yourself at a disadvantage.
So risk is obviously one of the biggest things that people are concerned about, particularly potential new investors. How should people think about risk when it comes to investing, be it online or you walking into an investment firm, and what role should their financial goals, time horizon, and personal circumstances play in the investment decisions they make?
So risks will be there. If someone is trying to sell you an investment avenue and they're not talking about risks, then they really do not understand what they're selling. So risk is more or less what happens if whatever we are trying to achieve as part of our expected outcome, what happens if we don't get there. And when it comes to investing, you have to understand something called true balance. This is your personal identity as far as accommodating or managing or having the capacity to accommodate the risks that come with investment. So you could be a conservative investor. If you're a conservative investor, you have no business exploring or navigating through the ecosystem of aggressive forms of investments like crypto commodities and all that. You are better placed with money market funds, the treasury bills and bonds, basically investments that protect or rather preserve your capital. You don't want to play along with investments that are pushing for growth and run a high risk of even losing the capital. Then there's a moderate investor. This is someone who manages to balance all ends of the spectrum. They're able to explore capital preservation forms of investments and also income and growth. So this is where we advocate that people should strive to be, because at the end of the day, in as much as we're trying to preserve our capital, we also have to keep in mind things like inflation. Your investment should support the inflation rate of your country or wherever you're at now. So if the inflation rate is about 7%, then the investment avenues that you need to explore are above 7%. If you're playing safe and working with 6%, 7%, then I would say you're just saving or you're just playing it safe. Then now there's the aggressive investor. This is one who does not mind losing the capital. They are there to play the game. And the thing is, with money, money is a game. So once you understand how to play it, you're also able to know, am I a pawn in this game, or do I have better capacity to navigate through this ecosystem? So lower risk, we have moderate risk, and we have higher risk. So investment avenues that play around lower risk, these are like the money market funds, the treasury bills, the government bonds, things like fixed deposit accounts. Moderate risk, we're talking about endowment policies, where now they have the capacity of capital accumulation. You put aside $10,000, in about 20, 15 years, it has tripled. So if your goal, if you're looking at the time horizon and one of your goals is one of my children will probably be getting into university in the next 10 years, then that's a good way to play around. That's a very safe place to play around, because you're moderate in how you're managing the risks that come. SACCOs is also another one, because again, there's the capital preservation bit, but there's the dividends that you get. So that's income. So you're able to be moderate there. For higher risk, now we're talking about the equity unit trust, we're talking about ETFs, we're talking about buying stock in the stock exchange, we're talking about even investing in businesses. Once you understand your true balance, then you're able to know where should I play as far as investing is concerned.
Sure, you've said a mouthful there. A basket of different investment portfolios, from government bonds and ETFs and all of the acronyms you threw at us. It is part of the education, right? And that's where you come in as a company,
Yes.
a digital commerce company, or digital financial education and mentorship networks. I want us to drill down into that as to what type of education programs you offer the consumer out there to be better equipped and make sense of everything you've just said now before they even think of investing their money. We'll continue with our conversation after the break. Please stay with us.
Rise and Shine with Peter Ndoro and Tsepiso Makwetla.
When we hear the 14th of July, an anthem should come to mind.
I'm waiting. It's American.
French.
Huh?
Yes.
But then they must be similar.
The American is. You
had the same thing.
The French is. They're very
all right,
different.
all right. Now we can hear the difference.
It's Bastille Day today, French National Day.
Sorry, French
I
croissants.
know.
French croissants is to the extent of my love, eh?
Oh dear.
Big continent, bigger conversations. Rise and Shine with Peter Ndoro and Tsepiso Makwetla. 6 till 9 a.m. on Channel Africa, the African perspective. The voice of the continent, now online, with all your sports fixtures, lifestyle, and more.
All right, 21 minutes past 10 Central African time. You are on the Journal with me, Ernest Pillay, through till 12 for midday. We're talking about investing and growing and multiplying your money through investing in the right investment portfolio, as it were. And my guest on the line is Kathleen Mureithi, founder and convener of the Wealth Circle, a global financial education and mentorship network. Kathleen, let's talk about the education, or at least the programs that you offer consumers there to be better skilled in knowing what choices to make when it comes to investing their money.
All right. So at the Wealth Circle, we have a diverse portfolio of programs that wealth builders can be able to explore. We range from the brackets of if you're in your 20s, if you're in your 30s, because again, there are different seasons of life, and every season demands a level of financial responsibilities. So, for if you're in your 20s and you want to explore, because this is the season of exploration, the season of establishment, we talk about what are some of the programs that you can be able to take part of so that you're financially literate. So we have master classes, we have advisory sessions, one-on-one advisory sessions for specific and customized areas as far as personal financial management is concerned. For example, if you want to understand taxation specifically, you're able to sit down with a tax consultant who will be able to make sense of your status as far as taxation is concerned, especially if you're running a business, whether you're in the idea stage, growth, or established stage. We have programs for if you want to explore the consolidation season of life, which is 40 and above, and you want to talk about wills, you want to explore trusts. How does that look like if you want to protect the investments that you've been able to acquire, or the assets that you've been able to acquire, and leave something to your children and ensure that they're protected if something happens while you're not here. So we have different programs for the different seasons of life, and then we have master classes where we tackle problems or pain points that cut across board. For example, on Friday we have a master class where we are talking about fixed income. So fixed income is an investment sort of program where we talk about the capital preservation investment avenues. So the treasury bills, how do they work? The bonds, how do they work? Things like commercial papers, corporate bonds. So if you're that investor that wants to explore avenues that protect your capital, you have not yet built the capacity to play around and manage the risks that come with the different forms of investment, then this is one of the master classes that you can be able to plug in and listen. If you want to explore the growth form of investments, we have master classes that you can be able to take part of. We also have mentorship programs, we have workshops. There are different areas of exploration that you can be able to plug in if you're a wealth builder, whether you're a professional or someone who's in business. And the good thing is that we are global. So we're not limited to geographical jurisdiction. We have members as far as South Africa, Rwanda, Australia, and recently just China. So we are really growing as a network, and it's good to see people being very disciplined and very intentional in understanding the architecture of money and trying to play on the advantaged side of it.
Yeah, no, that sounds interesting, and I like the fact that you are global in that sense. And as you just mentioned, you just became present as well in China. Now, on your offerings, I see here you have community networks, group chats, masterminds, and events designed to connect ambitious entrepreneurs, which is a good thing. I would imagine you bring a person who is thriving in this space to connect with potential investors, right?
Correct. Yes, yes, yes. So we handhold. That's the objective or the mission that we have. So in as much as we are sharing the information, we are disseminating this information. We realize that when it comes to money, money is very personal. So people tend to get to a point of information paralysis or decision paralysis. So you have a lot of information, but you don't know what to do or what to take as the first step. So we handhold you, and we're able to help you make that first decision. In terms of the business, depending on the different area that you're in, we're able to connect you with investors, whether it's an angel investor, whether it's someone who wants equity in exchange, whether it's just someone who wants to offer it as a loan or credit, and then you're able to pay it back as interest after a certain period of time. We're able to connect you with these investors who will be able to walk the journey with you, who will be able to even help you because along the way, when it comes to implementing the lessons that you get in class, it's very personal. So you need someone who will be able to even assure you that it's good. It can be overwhelming, especially when it comes to something called money and relationships. Sometimes you have to sit down with your spouse. There can be arguments, there can be disagreements here and there. So you need someone who will be able to even be empathetic with you in the journey so that you know and you're assured that you're making the right decision at the end of the day.
For sure. And Kathleen, just lastly, or before we get the contact details where people can connect with you. Now, for someone listening in who believes they simply do not have enough money to even get started, they are interested in this financial literacy and the programs that you offer. What would you say to them about getting started, just getting off the blocks and building an investment habit over time?
I will tell them this. The biggest barrier to investing or getting ahead as far as your personal financial management journey is concerned isn't usually the money. It's believing you need a lot of money before you can begin. That is where people get it all wrong. Today, many investment products allow people to start with relatively small amounts. What's more important than the amount you need to start with is the habit of investing consistently. Build that habit so that it becomes easier for you. If you invest a small amount every month, you're building discipline. You're benefiting from something called the power of compounding, which ideally is the eighth wonder of the world. And you're creating wealth gradually over time. So the best time to start investing is not when you're rich, it's when you're ready to be intentional with your money, because again, you need to remember that wealth isn't built overnight. It's built through consistent decisions repeated over many years. So wealth builders have mastered this, and it gets to a point where it's very easy. So anytime you get an extra coin, or you realize you have a few coins in your pocket, instead of spending that, you first of all invest some of it and then you spend it, because at the end of the day we have to live life, but don't live life and forget about your future, because the future will come and you need to be prepared for that.
That's a difficult proposition there. The best time to start investing is when you are poor, literally.
True. Now, the best time is now.
All right, Kathleen, just lastly, how do people connect with you?
You can find me across all social media platforms. My name is Kathleen Mureithi. My website also, you'll be able to find all the programs that we have. I have a good following on social media. We have these conversations there. So you just join along the journey and let's make sense and build wealth in this lifetime.
All right, Kathleen, we thank you so much for your time and insights. And I hope, I get a WhatsApp down the line in the not so distant future of somebody who took some of the insights and they can already see, positive results coming through. But thank you for your insights nonetheless.
Thank you so much, Ernest. Thank you.
All right. Kathleen Mureithi is the founder and convener of the Wealth Circle. It's a digital commerce company or global financial education and mentorship network offering all of those wonderful insights about how to safely invest our hard-earned money that can go a long way, whether it's investing and saving for the children, the family, or yourself, just to live off comfortably off into the sunset when you reach a retirement age, and perhaps even before that. So there you go. But please weigh in on the conversation. You probably are an investor yourself, or you have tried to invest money and you have yielded the results, or maybe quite the opposite. We'd like to hear that from you. You can drop us your WhatsApp messages. The WhatsApp line is +27 83 288 6684 on X at Channel Africa 1. It is now 11:30, or 10:30. I'm way ahead of myself here. 10:30 Central African time. Time for Channel Africa Sport with Figile Lingwati.
Sports on Channel Africa. The African